Howdy, everybody, and good evening. I'm going to be going over the day's trading. It was a great day to trade the ES and also some of the other markets. The NQ did especially well today. Um, First of all, let's go over the chart. I'm going to go ahead and pause this because I started it. Well, let's just let it run for a minute. I started at 8:37 this morning. Full disclosure here, I missed this trade because I was asleep, but this is the way the chart looked if I had been awake at 8:30 this morning Eastern time. I would have seen our good old resistance level hit down here, which was basically our level to go short into the trade. And essentially, the strategy is to wait until price action goes above resistance, which it does 90% of the, or 90+% of the time. It'll go above resistance somewhere up in this area and then come down through resistance through the bottom of that resistance channel right there. So sometimes it'll penetrate just a couple of ticks into the resistance area. Sometimes it'll penetrate way up here and then come down. If you wanted an early entry, you could get in here, but there's no guarantee that that R2 resistance will hold, or the overbought or any of this other stuff will hold here. So I prefer to wait until it comes down instead of getting it up, because what we'll do is we'll place our sell order at 23.75, which is the bottom of resistance, and then we place our stop loss one tick above the resistance plus one area, which is 23.77. So our entry would be 23.75 and our stop would be 23.77.25. And once I place that trade here in just a second, he was going with two contracts. I will show you how that works. So what I'll do is I'll place my sell order, my sell limit order. I'll wait until it let's see, 8:39. I'll wait until it pops up above that, and I would have already gotten into it at this particular point since it's dropped below it, but I'm going to wait here a second. Let's see if it pops up, because it usually will. It'll usually have a little bit of a pullback, and I'll usually get at that particular point in time. So I'm just going to wait here for just a minute. Usually you will see a retracement up here. So I'll get in right around 23.75. And I'm just waiting for it to pop up there. It'll take just a minute. While I'm waiting for that, what I'll do is once I place that sell order, I place my stop loss and then wait. If I get taken out of that stop loss, then what I will do is I'll wait until it goes above resistance, and then because once it penetrates the top of resistance, it usually goes to overbought, reversal, or sell stop, and then it comes down. Once it comes down, then I'll get into the trade. So this is a little bit riskier trade this morning, but sometimes it will just go into the resistance zone, not penetrate the top of the resistance zone, which is a real good sign for the short, and then come down. So my first stop or my first target will be 23.67.25, which is the major support resistance line, and then my final target will be 23.59.50, which is the top of support. We also have an S1 level down there, so I'm pretty sure we're gonna hit that. And people ask me, well, why don't you wait until it turns around at the bottom? Well, because I've found by experience with these Murray math lines that this was basically the best. It's the best place to get in and to get out. I've seen these Murray math lines work for months and months and months. What you'll do is you'll wait to move your stop loss until you had your first contract off, which is at major support resistance. Because sometimes price action will come back up and waffle around in that resistance zone, and you don't want that to happen. Okay, so I've just placed this. Let me move my stop up. Okay, so I got my stop. I'll have one contract off down here at 59.50, one contract off here at 67.25. This is pretty much my standard. There we go. Pretty much my standard standard strategy. I've developed the strategy over several months. I've been looking at these Murray Math lines for probably almost a year, I guess, now, and watching these in various markets. Okay, so now we're coming down below 23.75. My stop is here 77.25, which is one tick above. If I get taken out, that's that's the way it goes. Then I wait until it comes up in here and then comes back down. If it doesn't, Murray Math lines will shift up. And the strategy at that particular point is when that happens, I will wait till it comes down to that new support line, which will usually move up to that major support resistance. I'll wait until it retraces down here to the support, goes through support, and it comes back up, and then get into my long trade. So that's kind of the strategy in a nutshell. So I've seen this work time and time and time again. People will ask me, well, why don't you wait until it comes down here? Well, because that's where I'll take profit. And sometimes it won't. Sometimes it'll touch that. Sometimes it'll come down below this. Sometimes it'll come down all the way. But most of the time, we deal with probabilities when we deal with trading. Most of the time, it will come down here and touch that, and at least go one tick beyond it. So you'll get your fill right here, and then you'll get your fill right here. People, and the other question is, why don't you move your stop loss, as quickly as possible after you get into the trade? And the reason for that is because, as you'll see, sometimes it will retrace and will come back in here. If I waited until it came down to R1 or came down here and then it retraced, it would take out my stop loss, come back up here, and then keep going. So number one, I've wasted the opportunity, and number two, now I got to get into another trade. I got to wait until it comes back down and go through that, go through the whole thing all over again. If it takes out my stop, I got to, but that's another story. I don't like to move my stop loss down because price action will sometimes come back. Once I get one contract off, I move my stop loss to break even, and then come down. I used to move it to like break even +1 or +2, but sometimes price action, the market knows where these levels are, and sometimes price action will come back up within a tick of that and take you out. So, and then continue on its merry way, which it did the other day. So I'm already up 6 ticks. I'm working with 2 contracts. Let's speed this thing up a little bit because this is like 8:45. I'll usually start my trading day about 8 o'clock. Okay, see, it came back up. I would have taken out my stop loss if I had put it there, but it never came back up here. So if I would have put my stop loss to break even, I would have lost out of that trade and had to come back in. So that's okay. So let's see how this trade works out. I'm already up, 14 ticks. Keeps going. Market's not even open yet. We're coming up on market open here in another 10 seconds or so. And I'll show you the setup here in just a second on the Murray Math lines. Okay, market's open. So we got a short signal. The short signal here basically means the 13 and 34 EMAs have crossed to the downside. So I will expect, once it crosses to the downside, I expect it to come back up to the 89 EMA. If it doesn't, yeah, there it goes. Okay, pops back up to right around the 89 EMA, and then we'll continue south. See, another reason not to move your stop loss here. Here it goes. Comes all the way up again, and I'll move that out of the way because I don't want that was set incorrectly. I've got an incorrect setting on my stuff here. See, it came almost all the way back, which would have taken you out of the trade. So, and then it comes back. It came back up here, and it's fiddling around. So if you move your stop loss down here, it would have just taken you out on the retracement. You would have been out of the trade. Now you don't have another entry back up here. So don't be too quick to move your stop loss. Just be patient. Okay. Now now I'm about to have one contract off. Okay, just had one contract off. I move my stop loss to break even, and then I'll poof, then I'll let her go. Okay, I'm already up. I'm already up. What net of 60 ticks? I made what 30 ticks on that guy. So let me show my order fills here. Okay, so 31 ticks on that trade on the first one, and then we're coming up on 11 o'clock, just passing 11 o'clock, and see we come back down. Oftentimes it'll come back up to the major support resistance line after it crosses it. Usually it waits until the 89 EMA crosses that major support resistance, and it'll come back up to right around this area and then pop back down. Usually. I got a buy signal here, but that's barely crossing. So, and that's that pivot. Now it'll cross back down to the downside, and I'll get another sell signal. That's why. See, this is why I don't like moving averages. And you'll see that. You'll see crosses over here. And if you get in and out every time those moving averages cross, you will drive yourself nuts, and you'll drive your account down pretty quickly doing that. See how many crossovers there are. So we're just waiting. Now we're going to fiddle around here for a while. It's noon Eastern time, so we'll just fiddle around here for a while, and then eventually it will break down. I saw this do this for quite a while this morning, going into the afternoon trading session into the lunch hour. And it was bouncing in between that major support and down at the bottom of the range. And it just sat there and played for a while. Once it significantly dropped below the bottom of the range, then we started taking off to the downside. And you'll see that here in a second. Okay, 12:45. I think, as I remember, it was about 1 o'clock Eastern time, and it really started breaking down. But you can see the breakdown right here. It broke the bottom of the range. Now, here we go. Now it takes off. Bunch of buyers up here trying to buy it back up. Either that or profit takers. Some profit takers that were in from somewhere up here. So we're going down, and bam, we're out of our stop. We're out of our trade. So and the rest of the afternoon. Okay, we're up. What was that? 93 ticks right there. So entry here, stop loss here, one off here, second contract off here for 93 ticks. And if you'll do the math on that, 93 times 12.5 is a pretty good trade, actually. That's $1,100, almost $1,200, almost a $1,200 trade right there. And as you'll see, it basically, that was kind of the low of the day. It came down into the support zone. That was pretty much it. You could have gone long here if you were interested in just another trade. If you wanted to, you could do that. The strategy, if you want to go long, once you got out of your short trade here, it pops back up above support. Again, exact same thing. Stop loss down here, one tick below that support zone, one off at major support resistance, and then one off at the bottom of resistance right there. I did not take that trade, but if somebody wanted to, as you can see, we're almost up to the major support resistance line, and it's 230. So I have no doubt that we're going to hit that at least, and you'll get at least that trade right there, plus the money you made this morning. Get into that trade. Okay, we just touched it. 23.67.25. Once we go above that, then you would have gotten filled here at the major support resistance line. And now coming back up. See, it was a pretty decent day to trade. It was very nice. You had a one and done trade by 1 o'clock in the afternoon. You were done. You're done with your trading. You're very relaxed. You're just waiting for the market to come back down. And fill your targets. So let's see what this thing does. Oh, okay, there we go. See, you've gotten filled on the upside. There's one contract off. Move your stop to break even, and let her go. Let's see what happens. Let's see if I don't remember if it came back up here. To be quite honest with you, I don't remember where the market. I got involved with some other stuff this afternoon and wasn't really didn't pay attention after it hit the downside target. But once it hits those downside targets and it goes back up and comes back, it usually will go to at least major support resistance, if not back up to resistance right there. Especially if it started off in the morning back up here, it usually will come back up. I think they call it that the rubber band theory or something. That you know it will go down and then it will move. If it moves 10 points to the downside, then it will eventually move 10 points back up to the upside. Equal and opposite reaction type of Newton's law thing. And I guess that applies to markets too. That's what and that's what I've observed, and that's what other people have observed also. Now my resistance line, my R1 level is right over here. Okay, well we just it's in cash market close. So we would have gotten right off here, and then we would have closed out our trade. If we had gone in with 2 contracts, we would have just closed it out at the end of the day. So you'd have had 2 contracts, additional contracts there, which was 2367.25-ish, say for example, 2359.50. So what is that? So you're looking at 2367.25 and 2359.50, which is 7.75 points times 4. That's 31 ticks. Okay, so that would be additional $300, almost $400 there. So you're looking at a $1,500 trade, $1,500 day on the ES right there for those two, for just those 2 trades. Now, there have been some people that have asked me, well, how do you set up your charts, dude? Well, let me show you real fast. I get my Murray math lines. Those are an overlay from my 60-minute chart, and here's what my 60-minute chart looks like. I've got a bunch of stuff on there. One of the nice things that I have on there is let me get all the other junk off here. All the other junk, took that off. Let me go ahead and stop this guy, and I'll let this guy reload on the 60-minute chart. Once the 60-minute chart loads, you'll see the Murray math lines pop back on this chart. But you can see how bare this chart looks. It's like, well, where are we going today? How far are we going to go down? How far are we going to go up? With Murray math lines, I mean, support and resistance, it hit S1 down here. It came back to R1, which would have given you another entry if you had missed the entry up here. You could have gotten back in up here at R1. But sometimes that moves. Okay, so we got our support resistance lines back up. Here's my 60-minute chart. And let's go into settings. What I do is I've got Murray math lines here. Murray math lines are set at 16 square width for the look back. Look back, they used to call it look back. Now it's square width multipliers 1.5. And that puts these Murray math lines over there on here. What I do on my smaller time frame chart is I have a study window down here, and what that does is, I'll have to find it here real quick. I don't know exactly where I put that thing. There it is. On settings, basically I'm coming from that 60-minute chart, the Murray math level study, and fill blanks with last value, yes, which it will fill everything in, and then the only thing, use colors from source study, and always use short names from source study, yes, so that it will pick up all these tags. Otherwise it won't, and all you'll do is have lines with levels on them, and it'll be a little confusing. Anyway, that's what Friday's trading was. We had a real good day Monday, and this week it's generally been a pretty good week. Anyway, I guess we'll see you guys on Monday, and I'm going to try to do a pre-market on Monday. I did do a pre-market on Thursday, and I don't think that ever made it to YouTube. I am going to take a look at that and find out why that didn't. But the pre-market did exactly what we thought it was going to do on Thursday. So if I can find that, I will also post that a little bit later on. Anyway, hey, good luck, happy trading, and trade green, guys. See ya.